Good afternoon, everyone, and welcome to our YouTube live channel, Trending Thursday here on YouTube. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here and always glad to have VV Nation here. If you can hear me, by all means, please respond in the affirmative with VV Nation and let me know that everybody can hear me loud and clear, that we're coming across loud and clear, that the technology is working, that Joey's doing his job and not sleeping on the job like he normally does. Joey's a little grumpy today, by the way, folks. He's just a grump. Joey, say hi.
No.
See? He's grumpy. I told you he was grumpy. All right? But I'm happy for everybody here. Man, look at that VV Nation pop up. Goodness, Gordon Gin, as Susan would like to hear me say, holy smokes, you guys are coming out in force today. Thank you so much for supporting our YouTube channel. Holy smokes, you guys are rocking and rolling. So thank you for letting me know that everything is good to go. Couple of things. We do have, this is all podcastable. So if you are not here live and you're going to listen to this later, welcome to you as well. So you can listen and go shopping or go buy gas or whatever it is that you do. If you're a parent, go pick up your kids and then go listen to the webcast or the podcast. If you look down below this video, we do have the VectorVest store. Go down there and check it out. We've got cups. We've got shirts. Do we have masks down there still? We've got some coronavirus masks, folks. So, man, oh, man. Please don't blame Joey. He does a great job. Really? A shock? And Joey made sure he pointed that out in the chat. Whatever. Joey, you guys don't know Joey like I do. I love Joey to death. He's a good friend of mine, but you guys don't stand up for Joey. Y'all don't know him like I do. Looking sharp and red, says Lisa. You know, my wife made me buy this. It looks like a picnic table freaking cover. That's what it looks like. Wow, you trying to say I'm fat that it fits a picnic table? Really? All right. This is why I say don't stand up for Joey. Joey is not a nice guy. So go check out the store. If you have a mobile device, which I know we all do, look at this mobile device. We do have a mobile version of the VectorVest software. Patrick France, every Thursday at 11 o'clock on Facebook, he shows people how to use the mobile app. Social media follow. If you want to follow me on social media, if you type in Glenn Tompkins Jr., type that in for them, Joey. Glenn Tompkins Jr., G-L-E, 2 N's. And in Tompkins, no H. Joey's going to put it into the room. If you go to @Glenn Tompkins Jr. on either Twitter or Instagram, follow me. I put a lot of stories up throughout the day just to let you know what's going on. So there it is, @Glenn Tompkins Jr. Why did you retract it? You retracted it. Okay. Anyway, Joey's putting that up there. And right now we are running a special. Our marketing department wanted us to put this up there. We are running a special on our digital courses. Joey's going to put that up, I think. What is it? Joey's going to put that up there. I believe it's VectorVest.com. University.vectorvest.com. Is that it? I guess it is. All right, and you can save up to 50% on our courses. We have a lot of different courses, but for the month, I think, of September, do you September? When we fell in love, we were. Anyway, in the month of September, we will be doing a 50% off on our courses. So take advantage of that. That's there for you, especially for those people who are VectorVest subscribers. I'm going to put that up there. All right. Next thing I want to do is I want to introduce our special guest today. Her name is Susan Hayes Colton, and she's our marketing director for the EU. Is that correct, Susan?
That is exactly right, Glenn.
Okay, and Susan and I have gone back a ways. She's an outstanding person personally, but extremely knowledgeable about what's going on in the market. She is an economist, and she's been highlighted on TV shows in the UK, in the EU. I get those mixed up. That's my own fault. In the EU, so a lot of people turn to her for financial information. So she's awesome at what she does. I think that she adds a lot of oomph to our staff in regards to getting people to understand what VectorVest is all about. And she is the host of Fantastic Female Fridays. So welcome, Susan, everybody. Everybody say hello to Susan, number one. And number two, tell them a little bit about yourself and what Fantastic Female Fridays is all about.
Thanks, Glenn. Well, first of all, thank you so much indeed for having me back here today. I love your show, and it was really wonderful to be here with you a couple of weeks ago. So, as you said, my name is Susan Hayes-Cullerton. I'm Managing Director of VectorVest Europe, and we have over 2,200 stocks in our database. I'm going to be bringing you a European perspective today. Personally, as an investor, I like to look for income, look for my dividends. I'm a big options girl, so I like to sell puts in particular. I like to sell covered calls, I like spreads, etc., etc. And then, yes, indeed, Fantastic Female Fridays is a show dedicated to women and investing. And over the past couple of episodes, we've spoken about a wide range of issues, Glenn. I was absolutely honoured to have the opportunity to interview our new CEO, Linda Royer, for her first ever public appearance on our most recent episode. We spoke about setting effective financial goals, which, in a show like this, we don't have time to get into. But if you have a clear financial goal around the stock market and around your finances more broadly, then of course it can be super helpful when you're listening to and participating in Trending Thursdays. And also then we spoke about beliefs that can hold you back from financial freedom. We spoke about the ways that men and women invest differently and so on. So that's me. Really looking forward to having a chat with you today and taking you through what's going on this side of the Atlantic and right around the world.
All right. With that, Susan is going to help me in regards to what's going on in the markets, both her market and our market. She's going to help with the analysis on some of the stocks that we have up. So I like that perspective of not just listening to me, but listening to some. And, I am well aware that Susan's got a lot more credentials in this space than I do, and I value that 110,000%, and that's why I love to have her on board so that she can give a different perspective than what I get. I'm just a guy. I am. I'm a cool guy, but I'm just a guy. Susan's got a lot behind her in regards to what's going on in the market and understanding the market, so I think you're going to really love what she has to say. With that, let's start off with what we always cover every week. We always start off with what's going on in the market. So, good Gordon Gin. Look at the market. A big move to the downside. Primary wave is down. The price is red. The RT is red. There's looking like there's going to be some blood in the streets. Before you get all up in arms and panicky, VectorVest had been having you prepared for this. Number one, let's go back a couple of days in our color guard, which keeps track of 3 of our market timing indicators. This is just 2 days ago. Just 2 days ago. And I heard on YouTube in one of my comments, someone stated that, well, with the market hitting all new highs, somebody's wrong, and they didn't think it was the market, which left me to believe that you were saying that VectorVest was wrong. I answered, and I answered truthfully. I got a comment back that I was being condescending. And you know something? I don't think that I was. I was being very truthful. I'm always truthful to the point that I'm not going to always tell you what you want to hear, but I'm going to tell you what you need to hear and what the VectorVest software is producing out there. So that was a conversation that went back and forth a little bit. So, and I say that for the reasons of just a couple of days ago, looking at September 1st, right? That was Monday. Market's still going up higher, green lights in the price column, green lights in the RT, primary wave up, bada boom, bada bing, all new highs. What are we saying on this day? Be cautious. Why were we telling you to be cautious? Because we analyze the market differently than anybody else out there, number one. Number two, we have indicators that nobody else has to keep you abroad or keep you on top of what's going on. You know what we sort of kind of do? We sort of kind of give you the rest of the story that nobody else is giving to you. All they see is the market is going up. Nobody tells you, hey, be careful. Everything is telling you is the market's going higher. It's hitting historical new highs. Go buy, go buy, go buy. We never told you not to buy. What we did say is be careful. We never told you to panic and sell your stocks. We told you to be careful. And a lot of people, I caught flack for it. You know something? I got wide shoulders. I'm okay. I can carry that weight. But there's nobody on the other side of this camera or the other side of this microphone gonna ever tell me that the software is not working. All right, so from that perspective, let's go back to where we are now. If you're being careful at this particular point in time, what do? Tighten stops. Don't panic. Market's going up, great. Then the stocks that you tighten the stops on, they're still doing fine. They're still making money. But when a day like today comes, and we got all of this red popping up, and we look at the Dow down 792 points, the NASDAQ is down almost 5%, the S&P down over 3%, our composite down almost 3%. With all of that caution being relayed to you, if nothing else, you would have stopped out of your stocks a lot quicker than if the guidance wasn't giving you to be cautious. So that's what I got to say. I'm going to stick to that story. That's that. And for everybody who's trying to tell me that the VectorVest software is distinctive in the verbiage we use in the software to help our subscribers stay on the right side of the market. All right. So with all of that being said, Susan, you want to add anything to that?
Is what is going on in Europe, because it's slightly different. We had an interesting couple of days. In fact, we've had an interesting couple of weeks as regards what has been happening. So, for example, a really big story that came out of Europe was the stimulus plan was agreed. So, a stimulus plan of both grants as well as loans were going to be administered to the European Union countries. And from there, it was going to make up 750 billion of a stimulus. And this was a really big story, really drove on the markets and so on. Now, from there, then, of course, the detail needed to happen about what was actually going to get into those countries and how was that going to be fed right back in to the businesses and to the people and so on. And so anyway, that was a really big story, as I say, drove on the markets and so on. But yesterday, there was some new information out, and that is that we are at a risk in Europe of more deflationary fears. So the thing is that how does deflation affect the market? Well, what it does is that if things are going to go down in price over time, well, then that prevents people from buying. And if, of course, people aren't buying, well, then that's affecting how much people are spending. Because if prices are going to go down tomorrow, why would I buy today? And then, of course, that hits profits and so on like that. So yesterday, I was looking at the markets and every single stock that I had on my screen was green, every single one. And that was because if you've got deflation, well, then what happens is the central bank steps in and says, okay, we're not going to let this happen. We are going to pump more stimulus in over and above what has been already agreed. And then today was another story again, because the markets in Europe started off really well today. Now, what happened later on in the day, just like you've been talking about in the NASDAQ, what's been happening in the tech stocks, and I'd love later on, Glenn, to talk to you about volatility and what's going on there in the options volatility in particular. But anyway, before that, there was a €100 billion stimulus announced in France. Now, France is the second largest country in the EU, and further, the stimulus plan that was announced was 4 times bigger than that was emerging from the 2008 stimulus plan. And further, it's 4% of GDP, a third of it to be spent within the next year. So this was a really, really, really big deal. So this is what I'm saying is that at the moment, obviously, I'm watching the comments there, and there's a range of different people that are saying about the markets really being hit today. And that's primarily being driven by the tech stocks. Mm-hmm. But in Europe, we had a very different day. We've had a very, very different couple of days. And particularly, it's been the central story here is about deflation, the central bank stepping in for a different reason. How can the central bank and national government stimulate demand? It was announced today that in France they're not going to raise income tax to pay for the stimulus. Further, the same was announced in Ireland, actually, just announced today as well. So what we're trying to do here in Europe, stimulate demand, put money into people's pockets. And one last thing I'm going to say before I go back to you on this, Glenn, is despite the fact that this was a really big story announced today, particularly in France, about the 100 billion stimulus, people in France, consumers in France, have actually saved exactly the same amount of money this year. There's an extra 100 billion sitting in bank accounts right now, right around France. And of course, depends on a range of things, their own confidence, joblessness, as well as job prospects, wage expectations, and so on. So I just wanted to maybe start off today by saying we're actually looking at a slightly different story this side of the world. And I have to say, we almost had the same conversation a while ago for different reasons, but that's the big story come from Europe today.
All right. So with that, I'm going to start to go into our first story, which deals, I always start off the first story dealing with the market overview. So let's go take a look. Oh, I can click it there?
Yeah.
All right. So take that off. Wall Street moves higher, and this was yesterday. Wall Street moves higher, shrugging off ADP disappointment. There were not as many jobs added as opposed to what they were looking for yesterday. But the other side of that is today, not as many people were filing claims for unemployment as was to be expected. A little bit of an offshoot back and forth. This story, I'm talking about today's story, which is not here, about the move back of unemployment claims really should have bolstered the market to the upside today, but it didn't because tech stocks, which were moving the market prior to today so much, took the big hit today, driving the markets lower. So job numbers, whether it is how many jobs are coming out to people or how many people are filing for unemployment, they sort of kind of equaled out themselves. Good news yesterday, but bad news today. Bad news yesterday, good news today, sort of kind of butted heads a little bit. But do you think that from a jobs perspective, it should have driven the market higher? And this was Susan's story, talking about the global rise on hopes for central bank stimulus. Do you want to go more into this, or do you want to utilize this? Was just, I put the story up there. Did you want I thought you wanted me to put the story. Was I wrong to not put the story up, or yes, no, maybe?
Absolutely, yes,
okay.
Yes, you were indeed. I just wanted to maybe to delve into this a little bit more, because let's say that if somebody is interested in looking at Europe, obviously we have got a fantastic database right here at VectorVest where you can delve in and we can talk about specific stocks, which I'm happy to do. But also it's really interesting to look at Europe as a whole, because when you look at where the market is at in Europe relative to pre-COVID, and where you look at where the market is at in the States relative to pre-COVID, there is a difference there. Europe has not clawed back the same amount of ground. So the reason that I'm particularly interested in this is that we have got a further buyer potentially who is going to be at play here. Now, I do want to tell you one thing, and that is the euro is actually a very new currency. It was only brought into being back in 2002, right? So that's 18 years ago. It's now able to drink. But in addition, when we consider the impact of that, is that for a full decade, the Eurozone has now actually been underplaying its inflation expectations, because just like your good selves at the Fed, the inflation target is at or below 2%. So if we're not reaching that target, and on top of that, if we have an environment where, of course, that people are being held back as a result of COVID, and as a result of that, they're not spending as much, going back to what I said in France and so on, we are potentially then looking at an extra buyer. But there is another thing at play here, and this is really important for anybody who might be interested in looking at Europe from the point of view of investing, is, do you decide to invest in Europe using the euro, or do you avoid the foreign exchange and therefore you just invest in dollars? Because, Glenn, this is something that has been dominating the headlines here for a while, is the euro dollar rate. The euro has been strengthening and strengthening and strengthening. At the beginning of this year, €1 could buy $1.06. Just in the past 2 days, that has gone to $1.20. So that means that at the moment, my euro is strengthening and strengthening and strengthening. Now, the problem with that, of course, is that it does act as a drag then when it comes to exports. Right. And exports fuel the economy and the way in which people are then employed and so on. So as a result of that, and this has been a serious fear. Now, instead of this actually causing investors to hold back, they're actually driving on, because, as I say, if you've got a big buyer in behind you, this is the big story, is that we could have stimuli from the point of view of coronavirus, as well as, of course, stimuli from the fact that we're simply looking at either lowering inflation relative to where we thought it'd be, as well as potentially deflation. Deflation happened for the first time in 4 years in August. So therefore, they do not want to go down this road again. So the thing that I'm watching is the inflation target. I'm watching the euro value, and I'm also looking for potential announcements of new stimulus coming in the future. That's what I got.
All right. So I wanted to put those two stories together as far as what's going on in markets. I'm going to open back up the VectorVest software. Let's go down. Let's go take a look at on a graph. Actually, let's go do it from the viewers. Watch list viewer. Here are our stocks that we're going to look at for today. 9-3. Here's our stocks. We got a full gambit of stocks to look at today. But the two that we look at for the market are the VVC for those people who are VectorVest subscribers. And for those of you who are not subscribers, a good way to gauge what's going on in the market is the SPY or the S&P 500. All right, we're going to look at both of their graphs now that they've both been highlighted. Oh, that's cool. And there it is. The markets have been rising, rocketing. There's the S&P 500. I'm using two moving averages, a 3 and an 8 exponential moving average. Look at that. Rising, rising, rising. But here's that indicator. RT. Letting us know when the market's in an uptrend. And I want to show you, this is where that heads up comes in. When the market's moving higher, that relative timing tells you that the market is really going up with some oomph, with some chutzpah. When the market is moving up and the RT is not, even though it's above the value of 1 and it's not, that's not backing up the move in the market. Again, the reason why we said be careful in the market. Now, that's in the spiders. Let's go down to the VectorVest composite. Same kind of scenario. There's the RT on the VectorVest composite, and put that on a 3-month graph. It's moving up, but look at the two big candles for either the VectorVest composite or the SPY. Both of them big down. A lot of it has to do with the NASDAQ stocks, and they're just getting smoked today. They're getting smoked like a pound of ham, and I like bacon and I like ham, but nonetheless, it's getting beat like a rented mule. Who rents a mule anymore? Does anybody rent a mule?
Who says that?
I said that, but I'm wondering if anybody rents a mule anymore. Anyway, both of the markets, whether it's looking at the VectorVest composite or the S&P 500, big down day, but I do see that they've been moving up, and this was just in preparation of this was going to happen at some point in time. At some point in time. All right, I'm going to close out of that graph, those graphs. Let's go move on to our next story. Joey, I'm looking at, I don't see any questions. Okay. All right, let's go on to our next story. Now, our next story is in the coronavirus space. We always talk about coronavirus because it's a hot topic. Now, just think about this. It's been a record year in the world science of telemedicine. Why is telemedicine so important? Well, I'm a vet. My VA keeps canceling my appointments to set up video appointments. They don't want me to come into my doctor don't want to see me. They don't want to see me. All right. And if you call in and you say, well, doc, I want to see if I need to be tested. Doc said, well, stay home if you feel like you got it in quarantine. Doc doesn't want you to come in to even take the test if you don't have to. Telemedicine is huge, and I'm not sure how many of you realize that it is as big as it is, and that's why it's part of my coronavirus. I'm doing a little spin on coronavirus this week. Instead of concentrating on all of this stocks looking for a vaccine, I think telemedicine needs to be talked about. All right. And no company dominates the U.S. corner of this market more than TDOC. That's the company that we're looking at for our coronavirus stock today. The company is the oldest telehealth provider in the country. I don't know how many of you knew that, but if you didn't know that, now you know. If you don't know, now you know. With the demand for telehealth services higher than ever, all right, higher than ever because of the coronavirus pandemic, it's no surprise that TDOC's star power has exploded since the beginning of the year. All right, so that's the first stock that we're going to look at in this space. The next one happens to be a company called Fulgent. They're up 10% on COVID-19 testing deal for New York schools. New York has been a hotbed, along with Florida, for COVID cases. Fulgent shares spiked nearly 10% in after-hour session on Wednesdays as the company said it would supply COVID-19 testing to hundreds of thousands, not to hundreds, not to thousands, but hundreds of thousands of students in partnership with New York City Health and Hospitals at nearly 1,600 locations. That's huge. A lot of people are sending their kids back to school. You want to make sure that you're sending your kid back to school and that they're safe, and they're putting the testing out there. So a company has got a contract, a deal with New York City schools, again, in the hotbed of COVID cases. That's big news. That could affect the stock in a way that could be positive. So what I'm going to do is look at these two stocks, and I want to get Susan's take on them. The two stocks are Flugent and TeleDoc.
TeleDoc.
All right,
Yep.
So let's look at these real quick. Now, before I go to look at them, is there anything you know about these stocks that you want to put into play before I go analyze them?
Well, I'm just going to mention that it's just interesting that you mentioned telemedicine, because yes, it's everywhere now, and I do think that it's something that a lot of people would have shied away from before because they would have been worried about it wouldn't be as good and so on. So in a piece actually recently by McKinsey, they wrote about, and I just have the article up here in front of me, which is that telemedicine experienced a 10-fold growth in subscribers in how long, Glenn? 15 days. 15 days.
Wow. So
the growth of this area is absolutely massive, and also I think that a lot of it is here to stay, because if you're not well, aside from the contagious nature of COVID, if you're not well, you may not necessarily want to go and to sit among other people who aren't unwell. This area I think is here to stay. So I'm interested to see what your stock analysis is going to bring up here. I definitely think this is an area to watch.
Excellent. Before I answer the question, Kashif says, Glenn, if there was one technical indicator on the VectorVest software which captures the news sentiment, which indicator would that be? Don't know. If I find it, I'm going to sell it for $200 trillion billion if I have an indicator that can give me the news sentiment. I don't think that there's any indicator personally. I don't think that there's any any technical indicator that is capable of doing that. So there you go. All right, so now let's look at Flugent. The stock's price is at $33.16. The value is at $33.12. Our goal is to have you in safe, undervalued stocks. We're going to call this stock fairly valued. Upside potential, relative value. The stock's long-term price appreciation potential as compared to an alternative investment in AAA corporate bond. That's a lot to say. Upside potential on this stock, should you hold it compared to a AAA corporate bond? It's above 1, it's favorable. Relative safety, below 1. So it tells me that Flugent is a little bit more of a riskier stock, but it's got good upside potential. This is more of an aggressive play in and of itself with RV above 1, RS below 1. Relative timing tells me if the stock is in an uptrend or not. Well, it's above the value of 1. That tells me that the stock's in an uptrend. Not in a gangbuster uptrend, but in an uptrend nonetheless. In this list of VST, it's got a combination of value, safety, and timing above 1. The stock is resilient to big pullbacks. All right, so at 1.49, the comfort index shows me the stock's ability to withstand long or lengthy price declines. This is what catches my attention. The stock grows its earnings of $1.10 by 43% a year. This stock makes money and it grows its money. Remember, this, and you saw in the article, it's one of the longest, if not the longest running stock in this space. So I love the analysis. I do feel that if you take it, it's a little bit more of an aggressive move with relative safety below 1, relative value above 1, but beautiful from a fundamental side, growing their earnings at a clip of 43% a year. Now, let's talk about TeleDoc, trading at $203 and a value of $18. Stock is way overvalued. Now, could this TeleDoc be a news-driven play? Well, let's take a look at that, right? It's down today. It's down actually about $19 today for a loss of about 8.75%. Upside potential, not there. So this is not a stock that I really want to hold long-term. Safety, not there. The stock has got a little bit more risk associated. Relative timing, stock is not in an uptrend yet. The VST, the combination of value, safety, and timing is below the value of 1. CI, though, the stock is not susceptible to long and lengthy price declines. It's resilient enough. Earnings, negative earnings at less than $1, and They grow their earnings at a clip of 4% a year. So this could really be a news-driven story. I'm going to highlight, they're both highlighted. I'm going to look at the graphs on these. So Flugent, all right, Flugent's
I'm interested here, Glenn, to see that that's a really high CI. That's a really high CI.
For a stock that's got bad everything. I agree with you. I totally agree with you. As a matter of fact, let's go to that stock first. I'm not sure why the CI is as high as it is. Oh, maybe that's why. The stock does tend that when it does pull back, it doesn't pull back for long turns. It may pull back sharply, but it does rebound. It pulls back, it rebounds. It pulls back, it rebounds. And the rebounds are strong. For the most part, over and over and over again, I think that that's what's driving the CI high, number one. Number two, on a one-year graph, the stock is definitely moving from the bottom left to the top right. It does have some volatility involved in it. RT, for the most part, too, stays above the value of 1. The stock still shows that even in these sideways moves, that it's got more, it's more so in an uptrend than not. History is showing that the stock just moves and moves and moves. And right now, the stock is trading in a channel. Going to put this back on a 3-month graph. The stock, excuse me, the stock is trading in a channel. Even with the news, it's not enough to pull the stock up yet. It's not enough. And if I'm going to think about getting into it based on the news, I'd like to see the stock take out either this level of resistance at 235.80 or take out that high, one of the two. Because, or from a trade perspective, knowing that relative safety is below 1, I can play the bounces and retraces off of support and resistance. This could be more of a trade stock, but you would think that with the news, it should bolster the stock's price and push it higher. Just not happening. RT with today's action is now below 1, and the volume is starting to pick up a little bit even. We're getting a lot more sellers of the stock. Susan, anything you want to add to that?
Yeah, as I'm looking at this to me looks like a really interesting put spread. Trading in a channel, it's got the volatility. The only thing that concerns me, there's two things that concerns me. One is that the RT has gone below 1. I'd wait for that to turn around. And then the second thing is that I would be just a little bit, well, not a little bit, I'd be concerned a lot about that valuation. I mean, it's, as you mentioned, hugely overvalued. So I would be putting in a put spread as opposed to just a naked put option. But that's an interesting one. As I say, it's an area that I think is going to grow and grow. Yeah, I mean, I'm wondering why the company is losing money. I'm wondering, is it because it's investing in a lot of infrastructure? I mean, you can't just switch on Zoom. And I know, obviously, what's going on with Zoom today, but you can't just switch on Zoom, open your mouth and say, what's wrong with me? But I would be interested this looks like a really interesting one. As I say, got the volatility, got the channel. Just like you said, Glenn, it moves forward, pulls back, moves forward, pulls back. So this, as I'm watching it now, I'm thinking about, what could I do with an option here?
You know something? I think the spread is way too big to put a condor on. This is more of you got to pick a direction though, whether you're going to be bullish or bearish on what spread you're going to put on. And if I'm going to be bearish, at least I do have a level of support right here. That I could probably put on the spread, or it all depends on how big of a spread you want to put. $10, probably $10 spread, 220, 200. That'd be tough unless I know it's a big hit to the stock. Even if I took the 200 strike, if the market starts to go down and the stock continues, it's going to blow through that strike quick. But I think that's. I'd like to put it at the money or close to at the money to give it some room, or a little bit out of the money to give it some room. But this is tough. I think that long term this may have some upside. My relative value is not telling me that yet, but it makes sense that telemedicine is going to take off. This is something to at least definitely keep your eye on, if nothing else. All right, so it made the news, but I'm going to wait on trying to buy that. Here's the Flugent. The Flugent did take a big pop off of the news. The problem is the stock's price closed yesterday. Prior to the news, the stock's price closed at $28.83. It hit a high today of $35. You know what's happening? That's called profit taking. Coming off the stock getting smoked a little bit here if you held it. That was a good pop. You didn't replace all of the loss here, but you might have said, man, I'll take that off the table. There's a lot of sellers. Now, it's a green bar at the bottom because there were a lot of buyers coming in, but look at the big wick at the top of the candle. A lot of sellers are pushing it down. It's still open candle, but that's a lot of selling pressure on that candle. Anything you want to add, Susan?
Not really. I think you have it there. I mean, as you say, that like the doji the day before, 2 days before that as well. I mean, it does have all the hallmark there of certainly of profit taking. I mean, I'm looking there at your volume at the bottom. There was, a lot of people involved in making that happen. It seems to be that the buyers there are trying to win the battle. And I mean, the RT is just sneaking just above 1. I think you have it there in one, Glenn. It's one I'd be probably, a little bit conscious of. I think you're absolutely right. The back to school and so on like that. So, I mean, you would wonder whether it's had its big news out there. On the other hand, I mean, the other thing is that if you can take a test at home, then of course you're not going to be surrounded by other people. Again, I know I'm going back to the same point, but it really matters when you're dealing with a particularly contagious disease. There's a lot of people out there who are getting tested who don't have the symptoms, who aren't testing positive. So therefore, if you can do the test at home and you are testing negative, then you have a lower risk of contracting the symptoms from those around you who have a greater likelihood of being positive. So, I mean, there is a lot to be said for this. But again, I suppose I'm a bit like I was with the last stock. I wouldn't be taking action today. I'd want to see a little bit more happening. And a few people are asking that, they're asking that in the chat. What would you buy today, or what would you do today? I think one of the most important things that I personally find myself saying a lot when I'm speaking to subscribers is you don't have to take action every day. In fact, not taking action is an action. And certainly today, so far, Glenn, I would, on both of those stocks, I'd be waiting to see what would pan out yet.
All right. So that's our story on the coronavirus. A little different of a spin than we normally do. So I wanted to cover that. I think TDOC, someone says in the room, Livongo might be a better option than TeleDoc space. That's something we can take a look at, Daryl, when we do our quick fire stocks this afternoon. We'll take a look at that. All right, let's get into the next story. Before we do, if you like what you're seeing here, don't forget to comment, like, and subscribe to the channel. I still see a lot more non-subscribers to the channel viewing these videos than subscribers. Let's change that. If you really like the content, please subscribe to the channel. Help us to grow the channel. If you like what's being said by me and Susan both, please share your likes. Hit the like button. Let my VectorVest Nation show Susan some love and making sure that we hit that like button today, because I think she brings a lot to the table. I bring to the table, I bring spam, but Susan brings a sirloin steak. So it's a little bit different. That's what it comes to. That's the way I look at it. I bring some fried spam to the table. She's bringing the sirloin. She's bringing the ribeye. That's all right. But I do value her opinion tremendously.
If you like Glenn's shirt, hit the like button.
If you like Glenn's shirt, hit the like button. What's up with my shirt? Don't you like? What's up with that? I love my VV Nation. Put it out there. Be honest. I like it. Joey said I could wear this shirt today. I was going to wear one of my VectorVest shirts. Joey said I could wear this. And now it's really red on the screen. Good Gordon Gin. It really is. And it's interesting. In my social media, somebody in the room really gave a great comment to me, and I appreciate it. Who was it? I forgot, but I wanted to say thank you. Said something along the lines that I brought a lot of energy to the VectorVest YouTube. And Susan listens to Joey and I before we get started, and it was like, she listens and she laughs because me and Joey go at it. It was you, Steve. There you go. It was you. Joey and I go at it, and she says way back in the day she used to be like, wow, what are they getting ready to do? And now she's just like, oh, it's just Glenn and Joey. So I love
I'm just going to concur with that. Like, I mean, I genuinely, VV Nation, I used to be sitting here because we get ready a little while before all of you guys show up. And those guys used to be just going at it and arguing and everything. And I'd be going, I wonder, are they going to argue? Now I am topping up my lipstick and putting on my mascara as if it just, as if they're just having a chat and a coffee, which they generally are. So yeah, I concur.
All right. But again, Steve, I thank you for that. All right. Let's get to the next story. Next story talks about, this is my green, my clean energy section right here. And I saw somebody saying that Tesla is getting beat. They're getting beaten up in Tesla. I think that the two stocks that recently split in the NASDAQ were the two stocks that have been helping to drive the NASDAQ when the market was rocking and rolling. Now, I'm not trying to say that because today the market's going down, that the market's getting ready to fall off the face of the earth. That's not what I'm saying. But the same couple of stocks that were really pushing the NASDAQ higher are the same two stocks that are helping to pull the NASDAQ down lower. Tesla is one of them. But this is my clean energy spot. And this week, we're concentrating on electric vehicles. So there are stocks that are making the news in the electric vehicle space, starting with NIO. Other EV maker stocks fall as Tesla extends on the pullback. Shares of NIO sank 4.6 midday trading on Wednesday as they pulled a sharp U-turn after reaching an intraday record earlier in the session. Well, Tesla was hitting all new highs, followed behind another electrical vehicle company. NIO was running right along with them. But this is a China-based company for electric vehicles. Their stock was up as 4.6 intraday high of 2105, which is above the previous intraday record of 2097. This stock has been on a run just like Tesla was. All right, so Tesla's in the story. Nikola, that's like a cough drop, isn't it? But that's not the same
Ricola.
thing. No, it's shut up. I'm saying Nikola.
The cough drop's Ricola.
Oh, the cough drops Ricola? Oh, sorry. I don't mean to say shut up. I love you like a brother.
That's right.
I do love you like a brother. And the SPX Workhorse is another story in here. So that's one stock that's feeling the effect of pulling back in that space. Tesla Capital raise called a smart move. So now Tesla not only split, but they're raising money, I think like $5 billion. There it is, after disclosing a $5 billion capital raise. So not only did they split, they're raising money. Dude, but this is, I think, is a dilution of the stock. The split wasn't the dilution of the stock, but I think, and I could be wrong, and Susan, verify am I right or wrong, in the raising of the capital, if they're going to, I believe if they're buying back shares or putting more shares out there, and I'm glad that you're here to walk me through if I was incorrect or not. The $5 billion capital raise, tell me what that means. I'll do it that way.
Yeah, so they're basically raising the $5 billion, and it's interesting in the way in which they're doing it and the time at which they're doing it, because I mean, I don't know if anybody remembers when Elon Musk himself tweeted not so long ago to say that he felt that the shares were overvalued. I mean, in essence, Tesla can do whatever Tesla wants. It's the largest market cap of any of the car firms right around the market at the moment. It's ahead of General Motors. It's ahead of, it's ahead of everybody. So therefore, it can do what it wants. But when you actually look at the numbers of people who are buying electric cars, it is still only up to 5% of the US market, if I'm correct in that. So it really has cornered its own niche, as I know I'm telling people who are very familiar with it in this way. But in essence, what it wants to do is, it wants to buy some of its own shares back. I mean, why wouldn't it, based on the fact that it's up over 500% in the year? And it's a company that just keeps on going higher and higher and higher. I mean, the wildness of the PE ratio in that firm is just ultimately bizarre. It really, really is. I own Tesla shares a long time ago. I sold them before all of this was going on. I did make a gain, and it's a stock where I just think, I don't know, it's just gone off the charts, Glenn. I mean, even when I look at the when I look at the company, when I look at the way in which investors are treating it, it is just that Elon Musk can do no wrong.
Yep.
Tesla keep growing and growing. it's diverged completely from the fundamental analysis that you or I might know, and for that reason, I'd be quite nervous of it. I haven't been in it, and I'm okay with that. I know I may have lost out quite a significant bit, but I'm always nervous about being in shares where I just think, what the hell is going on? And I think that's the case with Tesla.
This is a perception stock. That's what I want to call it. This is what people feel. You know, Tesla is going to take over the world as far as the electric vehicle. The perception is ain't nobody going to beat them out. And that's what I think is really, causing that price to rise. We're going to analyze it in a second. Another one in this space, Workhorse. Workhorse stock is higher because the EV startup, has a giant partner. I believe this came on with a partner with Hitachi. Oh, man, what did you do to my story? I think they got a partnership with Hitachi, Workhorse. There it is. Company. It entered an agreement with Hitachi America to help it develop a national dealer network. Interesting. So now, from Workhorse, national dealer network, to start getting these cars and these vans, more so vans, out on the road. Hitachi will also help Workhorse develop into manufacturing and supply chain expertise. All right. That is another positive factor, considering that Workhorse just started making and delivering its battery-powered vehicles. All right, so Workhorse is in this space. I've got one more, Ideanomics. This is a stock I didn't know much about this, but I came across this thanks to Clay. I came across this as a stock that's in this space, and you know something? If nothing else, if you hadn't known, you're being introduced to more stocks that are in this space, because these are stocks that can compete with Tesla. Not on a big scan, but you know something? If Tesla is a stock that you feel is too expensive for you to get in, these are a couple of other electrical vehicle companies that you can get into. Ideanomics soared 53% towards a 19-month high in very active afternoon trading on Monday, after it's a facilitator of the adoption of electrical vehicles announced an order for 200 EVs in China. So that was another thing that was happening with Tesla. We did a story on Tesla about its rise. They're doing more in China. If you're going to sell some of anything, or a big market to sell anything, is China. Why? Because they got people. They got people on top of people on top of people. They got a lot of people. And if you're going to want to sell anything, why not sell it to lots of people? So think about it. Ideanomics has got an order for 200 EVs. That's a start. All right. And if they like it, guess what? Then China will say, hey, we want more. And then we want more. And then you got all those people to sell it to. You ain't going to never run out of people to sell to. So that's a big push for Ideanomics. But ticker symbol IDEX. There's other companies besides Tesla that are out there, folks, that are in the EV field. Just think about that. And that's what this story is about. Other stocks that can compete, maybe not on the same level as Tesla, but in that space to take advantage of. Susan, you want to add anything before I go analyze them, or do you want me to go straight to the analyzation?
Yeah, I just want to, I suppose, look at this. There's a couple of things that are really interesting about EVs. First of all, is the perception relating to the issues. So, can they go fast? Can they go far? Do you have to spend your life, just charging them and so on like that? And what's interesting about this is when you look at the retention of the EV market, is that generally when you go towards an EV, you don't come back. Now, that's one thing to bear in mind. So that, like, at the moment, as I mentioned, we've only got 5% of the market buying EVs anyway in the first place. But as that grows, should it grow? Now, should it grow? We'll also talk about something else. But should it grow, is that is certainly an area that is something that is worthwhile to be aware of, is that they are quite sticky. Because you don't have to go to the gas station if you can plug them in at home, assuming, of course, you're not living in an apartment block and so on. However, one of the key reasons, and I'm really interested in the comments of lots of people saying, yeah, but what about the EV supplementary market? What about people supplying into the EV market? And you guys are onto something. You're asking the right question. Because what Tesla has done phenomenally well is build a whole infrastructure around it. When you look at how it's maintained, when you look at the machine learning that happens, how the fleet updates each other, when you, like, even I was in one, about 9 months ago now, maybe 12 months ago. And I was interested when the person that I was driving with, it was her car, and she just said how even the playlist there's a playlist totally dedicated for people who drive Teslas. So there's a real community feel to it. It almost feels like Apple in that when you get in, you kind of can't or don't want to get out. But one thing I will say about other EV companies is they don't necessarily have that. And they're up against, will I have a Tesla or will I have something else? Because if you're going to have something else and it's not just going to be on price, what else is it going to be?
Right.
When you're looking at supplying into that market, just remember that all of that has to be played for. The other issue is that there are other car companies out there that sell both. An interesting statistic that I came across in a piece quite a while ago is, and I have it up here beside me, which is that in General Motors was the original pioneer with the EV1 back in 1997. And 20 years later, in August 2019, so 22 years later, it still wasn't selling more than 1,000 of electrical vehicles. And you might wonder, like, General Motors is a good company. Like, why is that? I've had shares in that before. Is that actually the business model of an ICE vehicle, internal combustion engine vehicle, versus an EV means that when you have an ICE vehicle, is that you have got a lot more maintenance. So in essence, would you be asking your own salespeople, if you're not solely EV, would you really be trying to push them in that way? Or does the business model direct you towards saying to people, well, you could buy an EV, it is significantly more expensive. Obviously, there's all of these benefits. But on the other hand, we also have these great cars, lower price, and then off you go from there. So I do wonder, Len, whether the business model of companies that offer EVs as well as others, as well as ICE vehicles, maybe it's not just the consumer that is driving the continued order of the ICE vehicles. Maybe it's also the actual business model within those within the garages themselves, and that's the real one to watch.
Well, I look at the American companies going after the hybrid market, which is both gas and electric. I think that was out of necessity to keep up with some semblance of what Tesla was doing. Tesla's doing all electric. I think there's a couple of cars over here that are all electric. What is the Volt? Is the Volt all electric? I don't know. Nonetheless, I think that the major car companies over here were trying to keep up in that space by offering the electric version or the hybrid version. I'm going to come up to something that James says. Shouldn't we be looking for stocks for companies that supply the EV market? That's a great question. Somebody had brought that up to me in one of our other sessions. And you know what I did? You know what I did for you? Because I love you guys to death. I got a watch list for you. Tesla-related stocks. Who's your buddy? Who's your buddy? I got you. So, Workhorse is in there. Aptiv is in here. BWA. Write these symbols down. And I've got them written on what these stocks do. Aptiv specializes in producing electronic safety components for auto manufacturers. Delphi designs, develops, and manufactures integrated powertrain technology. Borg specializes in supplying engineered systems and companies for automotive powertrain applications. Magna designs, develop, and manufactures automotive systems, assemblies, and components. TE Connectivity provides a variety of transportation and solutions, including connector, blah, 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 blah. I did some work to try to come up with these stocks. And you know something? I did that. You can't see my chart. What do you mean you can't see my chart? They can't see. What do you mean they can't see? This? I haven't got no chart up. These are just stocks that are associated within the other Tesla-related stocks. So this is still something that's going to be in the works. I'm still trying to put something together a little bit more. But James, you put that out there. This is the closest that I can get right now from that perspective as far as Tesla-related stocks, and we'll keep working on this list. And if I find more stocks, especially battery-related, I will start adding it. But I've got a watch list now called Tesla-related stocks, and I'll try to keep finding out what other manufacturers fit that. What is this list under the watch list? You don't have this, Robert. I created that. Notice that I've created a lot of watch lists specifically for Trending Thursday. All right, because you guys are here, you ask a lot of questions about this, that, and the other thing. I try to make sure that I bring up and build specific watch lists for you guys from the Trending Thursday. So you don't have this. I created it for you. I created this for you. And where are they? They're here. I just said I created it. It's in my VectorVest 7. All right, you ain't going to see it in your 7. That's what I'm trying to tell you. I can't tell you any harder than that. You're not going to see it. I've created it in this VectorVest 7 for Trending Thursday. For Trending Thursday. All right, so I was looking at SHLL. It's some kind of a company, an acquisition company. I wasn't sure if that was the right stock. I looked at it. SHLL. I will add it. I know it's an acquisition company. I looked at it. I wasn't sure if that was in there. It told me that it was, but I wasn't sure, but I will put that in there. Glenn, can we get your username and password? Yeah, that ain't happening. What you talking about? Man, you I ain't got time for that right there. I'm just trying to tell you, I ain't got time for that right there. But
that's a compliment, Glenn.
Say again?
That's a pure compliment.
I am going to build this watch list. If I can find more battery manufacturers and things like that, I will start putting them into this list. All right, so I wanted to bring that up as something that I did pay attention to for this segment. Let's go take a look at the stocks that are here. 9.3. Joey's saying I got a nervous clicking going on. Sorry about that. I'm working. All right, so Tesla was in there. NEO, Workhorse. IDEX. Oh, I hate when that happens. Tesla, NEO. How many stocks? 1, 2, 3, 4. There they are. I'm not going to even analyze them. Let's go look at them on the graph. Let's go look at them in the graph to determine whether or not these are stocks that you would buy or not right now. How did Apple get in there? Wow. Did you not see me highlight these stocks? NEO, Workhorse, and IDEX. Okay, that's what I got. Let's try this again. View the stock graph. So these are all in the EV field. Let's look at Tesla. Tesla getting smoked. So somebody told me that they were down a lot of money in their Tesla stock. Well, let me tell you something. No matter how good a stock is or how bad a stock is, but no matter how good a stock is, this is what stops are for, folks. If you're telling me that you're down a lot of money on there, I'm going to tell you why. I'm going to ask you the question why. I will preach to you, have stops to fit, to get out of the stock. So let's do something. Let's go put on a 20-day exponential moving average. Man, even with that, you'd still be in it. There's the split. It all depends on what your moving averages are, what your stops are. If your stop's still heavy in the stock, it is what it is. All right, there's no getting around that. And the question is, so what should you do now? The answer to that question is let your stops manage the trade. That's it in a nutshell. Let your stops manage the trade. I'm going to always be a big fan of that. The stock was really rocking and rolling. But another thing, one white shoulder candlestick, could that have been a possibility of something to get out with follow through? Possibly. All right, learning to read candlestick formations along with stops, whatever it works. You should never allow yourself to let a stock run away with a big loss against you, ever. Or even as the stock's price hit a new high and then started pulling back. What's to tell you that why not take half off the table after the stock pulls back after hitting a new high? Nothing wrong with that either. All right. Another thing, and I'm gonna spread this into something that Susan can talk on. Learning how to play options. If you like the stock long term, the stock starts going down. What's the best insurance policy you can put on? Without even a spread, a simple insurance policy. Buy a put on it. Buy a put. Now you own Tesla long term. You like the stock. That put now kicks in from that strike you bought. Let's say you bought the 50 strike or the 500 strike. Stock's price is going. You got full protection on the stock that you're still trying to hold long term. And the reason why I bring that up because options is a good way to protect any stock, especially if something like this happens and you're in it trying to hold it for the long term. Options are a great way to go. Susan, you want to say anything on this one?
Yeah, sure. Yeah, I'm going to pick up on that point. Just actually, somebody did put in a question there. It's a long time ago in the chat stream now, but they did say that they know that I like to sell puts, and either whether they're naked puts or whether they're put spreads. And they're just asking me about time. Now, one of the things that I absolutely know, and that everybody else knows as well, is that time will pass. So I know that if I sell time, then I know that definitely that is going to pass and I am going to get the time value. Now, therefore, I don't like to go out too far. And the reason that I don't like to go out too far is because I don't want to give a stock too much or too much time for me to be wrong. But also, if you go out very, very far, you're actually not getting the most optimal amount of time value. You're getting paid for your time, but actually you can capture, the theta is different. And I won't get into theta right now because, of course, that is quite a complicated area. But when it comes to in the money, out of the money, that's another question that has just come in there. And we could refer to this to Tesla, or we could refer this to lots of stocks. Let me tell you a story about a company that I brought up on last time that we spoke about on Trending Thursdays, and that is Paychex, right? Beautiful stock, Glenn, boringly profitable. It's one that had a dividend yield of over 3%, had higher, like relatively decent RV, decent RS, lovely, all sorts of everything when it came to earnings per share and so on. Anyway, I decided I was going to sell an in the money option, and particularly the reason I sold a naked in the money put option on that stock was I was simply willing to hold it. So I was happy for someone on the other side of that trade. Let's say that person is Glenn. Glenn decides to buy a put option and that I'm going to sell it to him. Glenn wants to make sure that he's got a floor underneath his stock, and he wants me to put that floor there. I'm happy to do so because I'm happy to buy that stock off him. He's happy to pay me, and I simply sit and wait to buy the stock. Now, that option expired worthless 2 weeks ago. A week last Friday, to be precise about it. And I simply kept the premium, and what I did was that I simply did it again. I sold a put option again, very same way, and because the stock had moved up, well then I moved up my strike and so on like that. And I spoke about that a lot actually. I went into a lot more detail on that in the most recent international user group that Stan ran. That was on the 4th of August that I spoke about that in detail about how I picked them. So when it comes to in the money versus out of the money, the question that you really need to consider is, do I want the stock or not? The more you want the stock, the further in the money you go. The more that you don't want the stock, well then the further out of the money you go. Personally, if I'm ambivalent, and I often am, because what I'm quite happy to do is I am quite happy to sell option premium after option premium after option premium, and particularly at the moment where volatility is quite high, I'm super happy to get paid to wait to buy the stocks that I'm happy to buy anyway. Now, if you're going to look at this, and there's a range of other experiences that you can have in the options market where you might take a different approach. Let's say, just like Glenn says, where you want to buy puts. If I was going to buy a put on Tesla right now, I have to say I'd be getting ready to dig deep into my wallet, because obviously today, given the fact that the price of Tesla is down the way it's down,
premium is going to be a lot.
Yeah, at the moment, I think based on what I saw there on your screen, Glenn, I think we're at 8% right now. So and a little bit more. Now, even if you go back before that, though, you'll see that the price has been volatile on the way up, which means that it has been going up and up and up and up. So the volatility that you're going to pay is quite significant. The higher you insure it at, no more than the higher you were going to insure a car at, well then of course, then the more expensive that it's going to be, and then of course you've got time value as well. So with insurance products, certainly if you are looking at buying something, when I talk about insurance products, just remember there's 3 things that drives that. Number 1 is time value. The longer you insure something for, the more you got to pay for it.
Right.
The more volatile it is, the more you got to pay for it. And the higher the value that you want to insure at, the more you have to pay for it. So me personally, if I was bullish on Tesla, what I would do, if I was bullish on Tesla and I'm not really sure if I wanted the stock or not, maybe what I might do right now is, given where it's fallen at today, is that I would be selling a put, possibly striking it at 400 or slightly lower, taking in that lovely juicy premium and deciding on the time that I would be willing to wait. The further out you go, the more that you're going to get paid. But just remember that theta, that is the decay, the time decay, that does change according to certain time frames. And I don't know, Glenn, is it okay if I elaborate a little bit further on that at the moment? I'm just conscious that this is your show, and I don't want to be taken over. But one thing that I did want to mention that is going on right now is it's something to do with volatility, and it's to do with the fact that there's certain times that volatility can be super high, right? And I don't mean today. I don't mean today at all. I mean that the options market, when you see people buying calls or buying puts, right? If they're buying calls, they're really bullish. And that's a lot of what's going on today, is there's been huge bets on Zoom, on Apple, on Tesla, etc., through buying long calls, right? So you see lots of people are buying calls. And when people are buying calls, well, then that's telling you that they expect the stock to go up, and they're buying calls so they can have the leverage in order to do so. So they buy lots and lots of them. Then you've got people who are actually thinking of buying the stock, looking at this and saying, if there's lots of call buyers out there, maybe then as a result, there can actually be lots of buying energy behind it. So then you get people who actually buy the stock. And then you get the call buyers going, well, now I've made a lot of money, and we have the self-perpetuating cycle. The thing is, though, what if they're buying puts? What if you're seeing an awful lot of people buying puts? What happens then? Well, then, of course, then what you've got is that you've got an environment where people are very bearish, or else they're protecting against bearishness. So I may not be bearish on Tesla, but I might be buying a put option on that. We call that a protective put if I have the stock, and if I buy a put option as well. I just want to buy a protective put on Tesla, and from there, then I know that I'm insuring myself against any decline should it happen. That's not to say that I'm bearish. That's just being somebody
protected. That's insurance. That's all that is insurance.
That's all it is. So therefore, it may then on the other hand, you see people who are thinking, oh, okay, well maybe if there's more and more puts being bought, well then that's pushing a lot of bearish sentiment in there. The key thing is though, is that what I looked at was where the implied volatility. So implied volatility is where people are buying more of either calls or puts depending on what they think. And guess what, ladies and gentlemen, there's a lot more people buying puts and calls in the American market in early November. And actually what I find really interesting is that the markets are now getting quite jittery, is that are we going to have what they call a clean election? Because if there isn't a clean election where there's a clear winner for whatever reason, well then of course the market is expecting to be a little bit jittery after a while. So actually, it's a long way of getting around to this. But if you were looking at a stock that may not necessarily be broadly affected by what's going on in the market, it's a very interesting time to be selling options around October, November right now. And that's why I'm looking at that for paychecks again. Long story, Glenn. Thanks for giving me the time to talk about it.
That's all right. You know something? I'd give you the shirt off my back, because if you needed it, I'd give it to you. That's all. It's all about that. JF says, thank you. She explains so well options. Sonny says, Susan's a great asset here. Let her run it. And you notice I just stepped back. Joey put her up on the screen all by herself because she got into it, and I'm all for that. I'm okay. You know? Yes, this is my YouTube channel, but again, I respect you 150, 11,000 trillion billion %. If you got on a roll, go. Let these people know what you know and whatever needs to be said. So, oh no, that's all right. Listen, I'm a guy. I'm a cool guy, and I'm not an egotistical guy, huh?
That's a stretch.
No, I'm not an egotistical guy. Whatever helps you guys, that's what this is all about. This YouTube channel still, we give the content, but if it helps you, that's all what it's all about. Why did the camera do that? Why did you stop breaking stuff? All right, stop it.
We'll try.
Listen, you know what that means? You know what that comes up to? That's right. See, Susan can't hear my sounds, but I just gave the punch-out sound for Joey. I just knocked him out. All right. John says, Glenn, you need to coordinate clothing with Susan. You know something? I could have wore the shirt that looked more like her color. There is a lot. Listen, it would have been a lot more blue, but listen, there's a contrast. I like that. We look like, we look like Skittles. I think we look like Skittles. All right, let's look at the other stocks real quick. We're not going to really go through them a lot. Let's go look at them real quick. NIO looks a lot like Tesla for a lot less money. See, do you see that? NIO looks a lot like Tesla, but for a lot less money. All right, that might be, again, all I'm saying is it could be a viable alternative. Another one, Workhorse. Workhorse is a little bit channelization. We got some channelization going on right here. I'm not sure. Workhorse needs to break out one way or the other. before I really am comfortable jumping on board with this stock. There's the swing high, right? Yeah, that's a good level of resistance right there. I'm going to leave that. That's a good level. But the stock is definitely in a channel. I'm not ready to pull the trigger on that, even in this space. And the last stock in this list is IDEX. Woo! Yeah, I'm not ready to touch this at all. At all. Not at all. Even though it's in the news story, I totally understand that. But yeah, I'm not ready to touch that. So Susan, I gotta keep moving a little bit. I just wanted to look at the other graphs as compared to Tesla, and I want to add one other thing. Joey's gonna put something up on the screen, in what Susan explained about playing options a little bit on these stocks. We have a webcast today done by our very own Jim Penna, who's the manager of retirement. For those of you who some of the option talk might have gone over your head, that's okay. We have a webcast called the Options Jumpstarter. It's a beginner's guide to profitable options trading. So you want to learn a little bit more about calls and about a protective put, which could be a possibility on some of the stocks that you own long that you're trying to hold right now. You want to learn a little bit more about that today at 4:30. If you go click on the Joey, did you put the link? Yep. Joey put the link in the room for you. All right, click on that link. Sign up. Huh? Oh, for the people on the podcast, you go to VectorVest.com/options. I keep forgetting about that. What?
It's right there.
I know. Leave me alone. Stop talking to me.
Forgetting the podcast.
Leave me alone. Podcast people, go to www.vectorvest.com/options. And for you that are here, the link is here, and Joey put it in there. Click on it. It's a free webcast. Go check it out. 4:30 today. 4:30 today. A really good basic understanding of what calls and what puts are. Protective puts really could come into play if the market starts to turn over on stocks that you're losing money in. And you say, oh my gosh, but I really love this stock and I don't want to lose all this money. Put options could help you. All right, now, and Susan's right. If the market starts turning around and volatility really starts going up, you're going to spend a lot of money for that protection. But that insurance, that protection can at least help you to offset some of the losses. All right?
Stocks of interest. Let's go.
We're up to stocks of interest already?
Yep.
All right, let's go to stocks of interest. Where does it start? Oh, let's start with jets. All right, so this is, people are telling me that the airline companies are starting to take off. Well, a lot of it is because there's possibly some more help coming to the airlines by way of stimulus. President Donald Trump said on Tuesday his administration would help the U.S. airlines facing sharp turndowns in passenger traffic as a result of the novel coronavirus pandemic, but gave no details. So I want you to understand that the airlines are going up on speculation that they are going to get it, but we don't know for sure. So it's being driven. Why? Because airlines have been beaten up so much that I think a lot of people are saying maybe now is the time to get in low. But if the stimulus does not come from them, there's a strong possibility that they can keep going down. Last week, I ran a story on United Airlines laying off 19,000 people. Airlines are in some dire straits right now. So if you're going to trade the airlines, I think just be careful trading them. We're going to take a look at what they're really doing on an ongoing basis, but just keep your eyes on them. Another one in this space, how about cruise ships? Cruise operators took a deep bruising from COVID-19, but history says they will recover. Listen, I don't know what history they're looking at. All right, but this ain't history. This is not normal history. This is unprecedented times. The cruise industry was among the industries rocked hardest by the COVID-19 pandemic, with many fearing the virus could leave a permanent bruise on the sector with a history of onboard illness outbreaks. But it's exactly that history that suggests this time won't be different and cruising will eventually flourish again. All right, so that was the story. We're going to look at analyzing the stock to give us a better perspective. Another thing, somebody wanted to talk about Zoom. Zoom's in here. Zoom. How many of y'all saw Zoom kicked off like nobody's business early in the week? September 1st, the stock was up pre-market 30%. We were in it in our jockey club. We made a lot of money on it in our trading room. We have a trading room in the VectorVest software. As a matter of fact, if you're not a subscriber to the VectorVest software, Joey's going to put a link in the room for you. You can take a trial to the VectorVest software for 99 cents for 30 days. But Zoom rocketed. The note is titled, Unprecedented Times Continue to Lead to Unprecedented Results. A lot of people, even in my church, a lot of the sermons are being done over Zoom or over some kind of social media meeting type of apparatus. Zoom is the biggest one that's out there, and that's what's really rocketed them from the purposes of going to school. Remember when Zoom went down, when school first started? Zoom got smoked like a pound of bacon. I like bacon. But anyway, it got smoked like a pound of bacon. You would think that with all of the schools starting to go back, and I'm sure that they had to put out an ungodly amount of money to go and buy more servers to prepare for all of the people going back to school. I'm sure that they probably did. And Zoom still got hit, but it is, man, that stock is just kicking butt taking names. Another one. How about from a stay-at-home, I got a stay-at-home watch list looking at all of the streaming stocks. How about Walmart's getting into that space? Walmart Plus, a hit on Wall Street and Main Street. Shares of Walmart are having a big day after the retail giant announced earlier today the launch of its new Walmart Plus membership. It's going to start on September 15th at the price of $98 a year. You know something? I didn't realize I was paying like so much money for Amazon. Good God. Do you have Amazon? Mm-hmm. I got Amazon. You got Disney? Mm-hmm. I got Disney. You got Hulu? Mm-hmm. I got Hulu too. Man, and I got cable. You got cable? Mm-hmm. Good gravy. I spend a lot of money.
You probably don't use it either.
I don't use half of it, but I just do it. Nobody listens to me. My wife doesn't listen to me. And then, do you have Sirius? Mm. I got Sirius too. I pay for so much crap. Anyway, Walmart is getting into the streaming space. All right, so that's news. I want to take a look at the stock. Importantly, we believe Walmart's relationship with Microsoft has deepened since their announced a relationship in 2018. We believe social media platform contingent with TikTok. Look at that. They're going after TikTok. That's why I remember that everybody and their mama wants to go after TikTok. I don't even have TikTok. I think TikTok is silly. Who wants to sit up there and do a dance? You sit up there and go, and then you put it on TikTok, and then
a lot of people on VV Nation would love to see you on TikTok. Jen. I think they'd love to see you do a dance.
Heck to the no.
Who's with me here, VV Nation? Who's with me?
Oh no. Oh heck to the no. Glenn is not even thinking about. I don't even own TikTok. And I do not want to get on TikTok. That would be icky. If you dance like that, then no. That's awesome. Joey took away my chat. That's messed up. Steve said if I dance like that, then no, he doesn't want to see me on TikTok. All right. Anyway, next stock, and this is another one. Apple. Somebody wanted me to talk about Apple. This is an interesting story. September stocks you may want to hold and fade after the S&P 500's best August since 1986. The two stocks that are here are Salesforce and Apple. All right, everybody knows I love me some Apple, but look at those graphs. Salesforce, look at that. In an ascending wedge, if that's what you want to call that. I love that graph. Coupled that with, oh my gosh, Apple. There's nothing bad you can ever tell me about Apple. I love me some Apple, but I'm not in love with Apple. I say that over and over again. I love me some Apple, but I'm not in love with Apple. But two stocks to consider. We're going to analyze those real quick. This is big because I know people who like weed, Joey. This is a stock. Canopy Growth. No, Joey doesn't like weed. I just wanted to put that in there. Canopy Growth opening its first dispensaries in Alberta. That could be big news. Wow, that's messed up. They made the marijuana leaf look like the Canadian flag. Wow. I don't know if that's good, bad, or indifferent. Anyway, opening up its first dispensaries in Alberta province. You know, was it last year, Susan, that they made weed legal in Canada? It was last year, or was it the beginning of this year? I think it was last year. I don't remember. I think it was one of the two. Weed is legal in Canada.
I can't remember. I know, and obviously there's lots of people looking at stocks at various different stages in this area, but yeah, that one I can't remember then.
All right, but I know it's legal in Canada, so if I really was all in, just could you imagine me on weed as pumped up and as hyper as I am? Could you imagine me going, dude, let's talk about trending things? I couldn't do that. Everybody would be like, Glenn is smoking that stuff. That's just like that. So anyway, that could be a big mover of the stock. And my last story in my stocks of interest is on oil. You know me, what moves oil? In my estimation is demand moves oil. Oil gains on U.S. stock drawer. So we started eating into our supplies of oil. Crude oil's extended gains on Wednesday after a bigger than expected draw in the U.S. crude stockpiles, and as solid U.S. and Chinese factory activity fueled optimism of a recovery from the coronavirus pandemic, boosting investor risk appetite. So I normally look at a specific stock, which is WTI, Western Texas, and because as oil goes, that stock tends to go. But this is interesting in trying to understand or ascertain if this is the right time or not the right time to look at oil. So this is what I'm going to do. I'm going to go pull up these stocks. Apple, Zoom, CRM, Walmart, Jets. Hold on.
As you can see, it's now at 143.74. I remember selling that put to buy Walmart. Then I remember getting paid the dividends, and then I remember selling covered calls in it as well. So I think at the time I made a significant income on it. I think that the income that I generated was far in excess of what the dividend was, but it certainly was helpful to the capital gain at the time as well.
And Walmart is a stock that we've looked at on more than one occasion here on Yes, I talked about it. So that's Jim Penna. Say hi, Jim.
Hi, everyone.
Okay, now get out. All right, that was Jim Penna. He was asking if I talked to everybody about the webcast that's coming up. He didn't even knock on my door, which really ticks me off. I'm going to have some words with him about that. All right. Apple, as much I recently bought back into Apple when the split happened. I own like 35 shares at $128. It's going down, and a lot of people are saying, well, what are you going to do? What do you mean I'm going to do? I'm going to leave it alone. I'm going to leave the stock alone. I'm bullish on the stock. If I ever get, and actually I can't even buy protection on it because I don't own 100 shares. But if I did, then I'd buy a contract of puts if I wanted to do that. They're going to be expensive. They will be expensive. But that's if I really, really, really didn't want to get rid of Apple, and I didn't really, really, really want to get a gut punch of the stock's price going down. That's what I would do. I would buy the puts on it. Please do not get. Okay. So as I go through these, if you want to add anything real quick, because I still got to get to my stocks, my quick fire stocks. If there's anything you want to add to it, let me know. If not, I'll go to the next stock. Susan?
I was just checking if you were talking to me or talking to the audience. Yes,
no.
there is something that I do want to add, and that is that one of the key things that's going on in Europe, and I mention this every time because it's a big story, and that is ESG, environmental, social, and governance. And there's lots and lots of debate around it. Is it real? Can people really make money out of this? Does it outperform the market, and so on? So last October, I really looked into this in depth, and I didn't just look at the returns. I also looked at the liquidity, and I also looked at the composition of ESG themselves, because a key challenge that a lot of people have around ESG is, well, how do they pick the companies? And some of the companies that might be high on ESG factors, you may actually say, well, I'm not quite sure about this. So I looked into that. I really did look into that. And back then, I put together a watch list. I did one both in Europe and I did one in the US. Now, in the US, I don't know, Joey or Glenn, if you can pull this up on Viewer, but particularly in the US, I had picked three ESG ETFs to examine. And if you just want to create a quick watch list, or else just on the Viewer, here are the three that I had picked at the time. One was, I'm just going to wait there now for the Viewer to come up. In anticipation, the stocks were DSI, So, DSI. The second one is TAN. Okay. The TAN, and the third one is ESGD, right? So ESGD. Now, they didn't all do very well, but one in particular did. So if you actually go back to the very beginning of the year, go back to the 2nd of January, if we just want to go back there to the 2nd of January, and let's just take a look at what happened. As I say, this was in my views in Europe. I wrote about this back in September of last year. And just really want to get to the bottom of this. And just we do a quick test until today, please. And thank you. And there you go. TAN actually is the solar powered one. That's up 64% so far this year. And then DSI now. DSI is the longest serving one. That's KLD. It's the KLD ETF. It's been around for ages and ages and ages. That has delivered 7.78%. And then the other one, the MSCI one, as you can see, it's down 7%. But if you compare that to the VectorVest composite, which is almost flat for the year, you would have been up 21%. So it's certainly something that is really interesting. Yesterday, for example, Germany, for the first time, the German government sold a green bond, and there was a bid of 33 billion euro for the bonds that were just worth 6 billion. So massive, massive, massive requirement. There are massive demand for it. Similarly, again, going back to what I said in France. So ESG, I have to say, it is big news. It's certainly a big story in Europe. The money that's in Europe is actually higher proportionally that's in the US. So it is a theme that I more so see my side of the Atlantic rather than yours, Glenn. But as you can see there, certainly that there's interesting ETFs to look at there in the VectorVest system. And when you look at the RT, you can see that TAN there, it's the one that's highest at 1.31. Obviously, when it comes to ETFs, we can't look at RV and RS and EPS and so on like that. But there's certainly plenty of other things to look at. Last thing I'm going to point out is look at that beautiful CI. If you're selling puts on stocks, what is a fabulous thing to happen is the stock to move from the bottom left to the top right. If you're out of the money, you're generating nice premium. If you're in the money, you're generating nice premium and taking on the stock. So that certainly is my other story that I wanted to pick up on today. Not necessarily a headline. This is a theme that as often as I will be on this show with you, Glenn, if you'll have me, I will be talking about this over and over again.
You got it. Not a problem. All right, let me go back to my listing of stocks. All right, real quick. Next one, Zoom. Oh, man. So it's getting a little hit. Now, because the stock makes the news doesn't always mean it's the right time to buy. And I'm always the first one to say that. If you own Zoom, though, man, that's a big drop from a high price of $478 down to $377. That's about $100, $100 drop. If you have the right stops in place, folks, after that big move on Monday, that's Tuesday, that's Wednesday, or was that Monday, Tuesday, Wednesday, today's Thursday. Man, this is where I don't care how good a stock is. You got to have stops in place. There's no ifs, ands, or buts about it. And anybody who ever sits back and says, man, I'm taking a big loss in a stock, I will still always ask you why. Why? You have to have stops that match up with the type of stock that you're getting into. And it's easy for me to sit on this side of the fence and say that. But as a trader myself, both as a trader and an investor, I never let a stock. I try very hard, even from an emotional standpoint, I try very hard to limit what my losses are going to be on any stock, no matter what stock it is. All right, so always keep that in mind. So I'm not ready to buy Zoom right now. The news is out there. The news was talking about how good it is. I'm not ready to pull the trigger on it. I bet you Zoom, because it's a software company, is probably in the NASDAQ as well. The stop on Zoom was 312. Oh, all right, so let's talk about that real quick. If I look at the stop that we have, all right, the stop that we have can be used as gospel or guide. I've learned that a long time ago. The stop that we have on the stock, all right, let's go to Zoom real quick. Zoom. Come on, zoom. The stop is at, where is it at? 297. There's no way in the world, all right, that I'm going to allow my stock to go down that much. So what do we say the stop is? The stop is the line in the sand. The line in, if you own the stock and it goes below that, if you still own it, you're holding it against your own. All right, your own, at your own risk. Because in order for a stock to get a sell recommendation, only one thing needs to happen. The price of the stock, like WTI, has to go below the stop price. That's why it's a line in the sand. Now, do I want to let my stock go all the way down to that price? Absolutely not. That's a big move in the stock. That's why I say you use your stops to accommodate how you invest in the market. Now, everybody goes, then why do you have the stop? Because the stop is a line in the sand. That if absolutely that should be just like the last line of defense. That's where you stop if you haven't already done it. So does that make sense? And that goes out to you, Harry. Does that make sense? If you need two numbers for a buy, stop, limit, order, stop, and a limit, what should they be? Well, if I'm going to buy a stock that's less than $20, I'm going to put a 5 cent above that as my buy stop, and 5 or probably 10 cents higher than that is my limit. All right. So if the stock is over $20, I'm going to put a 12 cent buy stop, and 10 cents higher than that is a limit. The 10 cents gives me some space that if the stock is still moving higher, that I got some room to get in. But if it blows through my limit, I don't get into that stock. So there you go. So the stop is normally either 5 or 12 cents higher than the current, than the stock's high, depending on what the price is. And the limit, I normally stick 10 cents higher than that to give me some space. Now, I don't remember all of the stocks that we looked at or didn't look at. Dang it. Jets is one of them. Let me go look at that real quick. View the stock graph on Jets. This is the airlines. Are you ready to pull the trigger on the airlines yet? Don't know. I'm not ready. Look at that. I can connect the lows. What else can I do? I can connect the highs. But even if I really do connect the highs, the stock is broken through a level of a wedge, but now moving sideways. The 3 and the 8 on Jets or the airlines is above. The stock is moving sideways. This is all in anticipation of possibly getting more stimulus from the government. But I'm not ready to pull the trigger on it just yet. Why not wait? Now, if you want to be speculative about it and go, I think they're going to get some stimulus, you can buy it now. I do like that the 3 and the 8 are bullish. I do like that the stock is hitting higher lows. I'm just not sure I'm ready to pull the trigger on it yet. Today is a big shooting star day as far as candlestick, a little bit of a sideways path. This is news-driven. I'm not sure I'm ready to pull the trigger on it yet. Let's see if it does get some stimulus, all right? Susan, anything you want to add to that? I'm only going to look at one more. Anything you want to add to that?
Yeah, I mean, I got in and out of Boeing there a little while ago, basically on the same thing there, Glenn. I mean, the thing was that the stock had gone so low. I mean, this is the thing, is that earlier on in the year there was some amazing bottom fishing trades.
Oil was one of them, and everybody was jumping on oil because the contracts went to below zero. And then since then, and I've been saying that demand drives oil. Demand hasn't been there, but the bottom fishing opportunity was there. But since then, oil ain't what it needs. It's not where it's supposed to be. What you think? But keep going.
Exactly. I mean, another story you picked up on there that I didn't jump in on at the time, but to point out is Carnival. I mean, in the cruise line area. I mean, the stock had fallen, it was down to about 20% of its share price. The option premium on it was amazing. I sold a put back in April. I mean, I would have been buying the stock at about 5% of its original share price. I struck it at $12.50. I mean, it was just incredible at the time. The reason that I went in, it was actually quite a conservative thing to do, was that I went into that cruise lining company. I sold a put on it. I sold it at the money, so I didn't know whether I was willing to take it on or not. Well, I did know, but I just didn't want to necessarily make that decision. And so I sold it at the money, took in a hugely juicy premium, and the stock went up, and then it pretty like a kind of a head and shoulders really is what happened. But if I had taken on the stock at the price that I had taken it on, it was going to be much lower, and I had got the premium as well. And I was really going in at that bottom fishing level. I wouldn't be going in today because I don't think that we're in a bottom fishing environment like you've just mentioned there, and we're in a different sort of scenario right now. But yeah, I agree. I think you either need to see technically about your position to know why you're going in. Something that I learned from doing Trade Like a Pro, I did the Trade Like a Pro course in North Carolina, would you believe, 2 weeks after my honeymoon. I did it, and one of the best pieces of advice that I got, actually, it was from Steve Chappell, and he said, and a couple of other guys who have since left VectorVest. But the particular thing was write down why you take on a position when you do, so that if the market is tanking like you see Tesla doing today, or if it's rocketing, at least you know why you bought. And that's a really important thing to do, because then you'll remember why you're in a position and what to do about it. So that's what I would say on something like what you were showing there in terms of the airlines. Just know why you're getting in. If it's speculation based on stimulus, well then, then you'll know what to do, whether that speculation comes to pass or not. At least technically you have something to fall back on again. But I certainly knew what I was doing in Carnival, and happy that I did it, but not anymore.
And talking right along with Carnival, one of my other stories was Norwegian. A lot of Carnival and Norwegian, all of those stocks in that industry look a lot alike right now. They're not
Very
getting
similar.
any stimulus, but you know what's interesting from a candlestick pattern? Look at that. Look at that hammer formation right there. Look at the 3-8 follow behind it, and it's still moving up. Now, if you're from a trade perspective, because RT is not above 1 yet, it's trying to get there, not there yet. That could have been a good early op, but it would have been a trade. Just like Susan said, write down what you're trying to do with this trade. With this trade. Well, I'm looking at this. They're getting beaten up, but I see a technical formation happening. This is a trade. Now, if this is a trade, I like using the 3 and the 8 on the trade to get me out of it, to keep me from pulling my hair out. The stock pulled back a little sideways. The 3 and the 8 held. The stock dropped one big day. How many of you, without having something to gauge by, would look at that and go, holy crap, I'm getting out of that? 3 and the 8 on the end of day basis didn't hit yet, and still look at the stock. So from a trade perspective, I like NCLH or Norwegian. I probably would like Carnival. I think the graphs look sort of kind of alike. Just be careful. Big shooting star pattern today. Probably look for some follow through to the downside tomorrow. All right, Susan, we covered a lot of stuff today. All right, so what I'm getting ready to do is I'm getting ready to say goodbye to you for the day. I want to say thank you so much for all of the insight that you brought to the table today. Again, I got my little Spam. You got the sirloin. I'm all right with that. I am so okay with that. She got filet. All right, actually, she got ribeye. She got that rib. Anyway, it doesn't matter. I love the way that you talk about the things that you talk about, and I like the deep thought that you put behind what you do, more so what you say in relating your trading in what's going on with the stocks that you've traded to go along with the stories that we have up here. So with that, I want to say thank you so much for being here. And guess what, folks? I will be on her show tomorrow on the Fantastic Female Friday. I'm going to have to put on a wig, though, and be like, hey, because it's Fantastic Female Friday. But it's going to be talking about how to talk to your kids about investing. I've got a blended family of 6 kids. After you look at it, 4 daughters, 2 sons. And I have talked about investing in my kids, but we'll get more deeper into that into tomorrow. Susan, you want to add anything to that before we go?
Yes, indeed. I just want to tell everybody that we're going to have a very different conversation. So yes, indeed, Glenn is coming over to my show tomorrow on Fantastic Female Fridays, and I really admire the fact that Glenn was happy to talk to me so openly about the way in which he engages with his family about this area. He told me back when we were only brainstorming the idea around Fantastic Female Fridays, he said, Susan, I've got 4 different daughters. I said, different ones, Glenn? Yes, he said. So I said, well, you know what? I'm not going to let that opportunity pass me by. So definitely tomorrow, those of you who can join us, we'd love to have you. Friday, 12 noon Eastern time, right here on VectorVest, the YouTube channel. Just make sure you can set a reminder. If you search for the link, you'll find it. If you go to vectorvest.com/FFF for Fantastic Female Fridays, you can register or just tune back in here again. As always, Glenn, it's a pure pleasure to be here. Thank you for giving me the opportunity to talk about what I certainly love to talk about in the markets, whether I can weave in economics, I can weave in the options, I can weave in what's going on in Europe, and I can weave in the feminine side of the way in which women invest as well. So it's always a pure pleasure. Thanks so much indeed to everybody who has commented and who has asked questions, who's engaged with us. I love talking to VV Nation. Thanks again so much, Glenn. Best of luck for the rest of the show, and see you soon. Back to you tomorrow.
One more thing. Do you have any social media outlets that people can reach you and find you on?
Absolutely. I am on Twitter at Susan Hayes _, and I'm just going to post that there in the chat. I'm on Instagram at Susan Hayes Culleton, and I'm also on LinkedIn just under my own name, Susan Hayes Culleton. So actually this week, Glenn, we had a twinterview where VectorVest and I had a twinterview on Twitter. So there's lots and lots of VectorVest activity been happening on my Twitter recently, and absolutely would love if anybody wants to check in and follow me there on any one of those channels. It's, as I say, it's always great to have you, and also it's really fun to follow Glenn on Twitter too. I have to say he's the same in person as he is on the show. I can tell you, I've had the pleasure of meeting him in person. But you know what I will say on this, on the last thing I'll say before I go is, we may be the filet mignon, but definitely our side is Joey. So thanks so much, Joey, for keeping us straight and keeping us right on track and taking care of us in the way that you do. I know you're behind the scenes, but I'm sure VV Nation love you, and certainly I appreciate you immensely on behalf of the guy that says that he loves you to death. Thanks again so much indeed, Joey, for all that you do. Thanks again, Glenn. Best of luck with everyone.
Thank you. And I want VV Nation to put those likes up for Susan as she goes, because I think she did an outstanding job. This is not the first time we've had her on Trending Thursday. And again, I love having her here. I think she's an amazing individual. She's an amazing economist. She's got such immense knowledge about the market, how to trade the market, and I think she gave a lot of that to you in the presentation today. And I will always take a back seat to her when she is here because she deserves it. She deserves it. She knows what she's talking about. So with that, we covered a lot of material and a lot of time today. So tell you what we're not going to do. Unfortunately, we're not going to do quick fire today. I was going to, but we had a lot of conversation. I think that will make up for not doing the quick fire today. Susan brought a lot to the table, and I appreciate that. Okay. So I know Tyson, I'm not gonna do it today. We're already pushing almost an hour and 45 minutes worth of time. An hour and 45 minutes worth of time. So I apologize for not doing the quick fire today, but we'll do it next week. We'll also have a stock market confession. We'll actually have a stock market confession next week. All right. So, how many likes did we get? 160. That's all. What did you want me to do?
Just talk about the 50% off.
I did. Did I not do that?
Yes.
Okay. So 50% off on the. I don't know.
University.vectorvest.com.
University.vectorvest.com. Again, we are offering 50% off of our VectorVest courses. 50%. And Jim's thing is at 4:30, which is www.vectorvest.com/options. And Joey's, you don't hang up. I'm not finished yet. You're not until I'm finished. You wait. Listen, you slow down before that happens to you.
They want to know about the trading room.
Oh, the trading room is on. In order to be in our trading room, you have to take a trial. Type it in the room. You gotta type it in the room. You gotta take a trial to the VectorVest software for 30 days. If you take the real-time trial, you will get access to our trading room. And risk-free trial 30 days. You want to take the real-time trial for 30 days, and it's called the Jockey Club. We have an hour and a half worth of actual trading with real money in that trading room. All right. Last but not least, before I leave, to catch me on social media, go to @GlennTompkins Jr. on either Instagram or Twitter. And I post all kinds of stories throughout the day. All right. With that, folks, adios. I got 168 likes. Man, all right. I'll take it. I wonder how many people subscribe to the channel today. Again, don't be afraid to subscribe to the channel. I got more non-subscribers than subscribers to the channel, so I'd rather see you. If you like the content, subscribe. And the horses are fast and furious in the Jockey Club. Hi, Kirby. How you doing? Kirby is part of the Jockey Club. So there we go. So with that, I gotta go. Joey. I gotta go. Adios, arrivederci, ciao, au revoir, sayonara, aloha, salam, Shalom, namaste, peace. We're out of here.